Welcome to the Daily Insights That Matter. Now, the recent release of inflation data brought positive news on both fronts. While we've already discussed about the Retail Consumer Price Index or CPI inflation, which stood at 4.7%, the Wholesale Price Index or the WPI inflation cooled down to minus 0.92%, marking a decline for the 11th consecutive month. Now, it's important to note the difference between WPI and CPI before we dive deeper. WPI measures the average changes in the wholesale price of goods, while CPI measures the average change in retail prices of goods and services. WPI focuses solely on the changes in prices of goods, while CPI takes into account the changes in price of both goods as well as the services. Additionally, the WPI places more emphasis on the manufactured goods, while the CPI assigns more weightage to food items. Now, in April, the Wholesale Price Index dropped to minus 0.92%, which is a decrease from March's 1.34%. Now, this marks the 11th consecutive month of declining WPI-based inflation and the first time since July 2020 that it has reached the negative territory. Now, the decline in WPI was influenced by various factors, including lower crude and energy prices, as well as decrease in the non-food and food articles. Manufactured products have also experienced deflation for 2 consecutive months. Now, the deflationary trend seen in wholesale inflation is expected to eventually impact the retail prices as well, albeit with a time lag. Now, the low inflation numbers can be attributed to the reduced supply pressures, a favorable base effect, and the declining commodity prices. Retail inflation has recently been recorded 4.7%, below the RBI's target of 5%, suggesting a trend of easing price pressures. Now, the lower wholesale price index could contribute to a decrease in the retail inflation with a delayed impact on the core consumer price index. India's merchandise exports fell by 12.7% year-on-year in the month of April, reaching a 6-month low of $34.66 billion. However, imports dropped even more, falling by 14% year-on-year to $49.9 billion. While merchandise exports declined, services exports remained strong, showing an impressive rise of 26.5%. Now, in the services trade, India achieved a surplus once again of $13.8 billion compared to a surplus of $9.99 billion in the same period last year. Now, all of these factors led to a decrease in India's overall trade deficit for goods and services, which reached a 21-month low of $1.38 billion. Now, imports have dropped because the prices of commodities have cooled down, making them less expensive to bring into the country. On the other hand, the decrease in exports is mainly caused by reduced demand in important markets and the lower commodity prices. Non-essential products are also experiencing lower demand. Gems and jewelry as well as petroleum are significant contributors to the decline in imports. However, there is good news for India's electronics sector as the exports have risen by 26%. Although there is less demand in key markets, the World Trade Organization predicts that India's exports will rise by 1.7% in 2023, higher than their previous forecast of 1%. Furthermore, trade growth is expected to rebound to 3.2% in 2024. This suggests some optimism and indicates that global trade is not completely collapsing at this point. So what does all of this news mean for you? We continue to keep our reservations on the inflation outlook as there are several factors that drive it. Having said that, the moderation in both the wholesale and the retail inflation will provide comfort in the policy setting framework to the RBI in the coming months. This will therefore have an indirect positive impact on you. Now, in contrast to merchandise trades, service trade are growing remarkably. This upswing in services exports may serve as a protective measure for the economy against external risks and the growing overall trade deficit. This will therefore have an indirect neutral impact on you for time being. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com